Yeah, hi everyone. Welcome to my channel Corporate Bytes. And today I'm your trainer Kabir Khan, walking you through on the various accounting processes related to the multinational companies. So let me share my screen. Yeah. So before I start the video, yeah. So let me introduce my channel Corporate Bytes. The purpose why I have created this channel is to impart the knowledge, whatever I have gained during my tenure of the 7 years working in the multinational companies. So let's get started with the main agenda of this. Yeah. So today we will be discussing about the most important processes, accounting processes, which we come across in the multinational companies. So we all know, like in the multinational companies, the scope and the opportunities are getting increases. So when we are saying the accounting process, so when we are saying the accounting process, we all know like the accounting is the art of recording, classifying, summarizing the business transactions in the significant manners. And so the preparation of the accounting process, I mean, the preparation part will differ when we are talking about the domestic companies and when we are talking about the multinational companies. So in the domestic company, we will find one person doing all these stuffs, all the accounting entries, preparing the different financial statements and all those things. But in the multinational companies, they have designed the process into the different parts. So here we can, so in this we will discuss about that various process related to the accounting. So first thing is the P2P process, which we will call it like a procure to pay process. And in this video, just I will be giving you only the overview of the processes. And in the upcoming videos, we will discuss in details about all these processes in depth. So we have the various processes, accounting processes in the multinational companies. So first one is the P2P, procure to pay process. Second is the O2C process, which we call it like the order to cash process. Third is the R2R. So we call it like the record to report process. And the fourth one is the FP&A, financial planning and analysis. So let's discuss what exactly does this means. Here. So we have the P2P process, which we will call it like the procure to pay process. So procure to pay process. So this process will come into the picture when the company procured the goods from the different vendors on the credits. So when the company purchased the goods from the various vendors on the credit basis, then P2P process comes into the picture. So P2P, and in other terms, we call it like the accounts payable streams also. So AP is nothing but here, the AP is nothing but the accounts payable team. So accounts payable is the amount due by an organization to its vendor for the products or the services procured on the credit. And we all know like the accounts payable is classified as a liability account because this is the obligation for the organization to pay to the outsiders. So this is all about the P2P process. And in the P2P process, we have the sub processes like the invoice processing team will be there, vendor management team will be there. So that we won't be discussing currently in this video, that we will discuss it on it later. So second, let's talk about the order to cash process. So order to cash process comes into the picture when the company sells the goods to the outsiders on the credit basis. So in short, order to cash is the entire entity of the company's order processing system. It begins the moment a customer places the orders. So whenever the customer purchases from us, so then the order to cash process will come into the picture. So for that reason, we will say sales is the first state of the O2C cycle. So we have the O2C cycle where we have the billing team will be there, cash application team will be there. So different sub teams will be there under the O2C process. So that we will be discussing in the upcoming videos in details. So for now, O2C is the order to cash, and it comes into the picture when the company makes a sales on the credits. So let's move to the another. Yeah. Third, we have the record to report process, and I feel like this is my one of the favorite process, record to report process. And record to report process, we also call it like the counting to report process. So it includes all the process, the time you record the transactions by the way of journal entries or the feeds coming from the subledger or the subsystem into the main general ledger till the time we report our financials to both the internal and the external stakeholders. So record to report process plays an important role. Why I'm saying that it plays an important role because uh, if if APT misses to process the invoices which are due in the current period, so that will be captured by the record to report process team, and we will book an accrual for those invoices which are outstanding and not been paid and which they missed to record into the systems. So record to report process plays a significant role. So and record to report process starts the time we record the journal entries. It's not about record to report process, not only about the recording of the journal entries, but it's also involved the reporting of the financial statements to both the internal and the external stakeholders. So internal stakeholders is the management we can say just as an example, and external we can say the shareholders or whoever the outside third party who invested in the firm. So we can consider them as external stakeholders. So let's understand what comes under the record to report process as an overview. So let's understand and what role process that GL consists and what constitutes the R2R. So I have seen most of the time people gets confused about the general ledger process and the record to report process. But there is a difference between the general ledger process, GL process, and the record to report process. So if a process has closing and reporting process, so month end we have the closing and reporting where we close our books. So second is the fixed asset, and we have the fixed asset team separately, and we have the intercompany, and we have the reconciliations. So if the processee has this four sub-process, closing and reporting, fixed asset, intercompany, reconciliation, then we can say that process is only the GL process, not the R2R. So again, I repeat, so if the process has these four sub-process like closing and reporting, fixed asset, intercompany, reconciliation, then we can say that these forms part of the GL, so general ledger process. But apart from these four sub-processes, we have FP&A, tax, and the treasury system. Financial planning and analysis, tax, and the treasury, then we can say that process is the R2R, that is the record to report process. So in short, record to report process should have closing and reporting, fixed asset, intercompany, reconciliation, FP&A, tax, and treasury. So in the upcoming videos, we will be discussing each and every topic in details. So in this video, I just wanted to give like an overview how the accounting process, what are all the accounting sub processes are there in the multinational company, so that we will be aware. And in the upcoming videos, I will be walking you through about in details of each of the process, what exactly comes under P2P, what exactly comes under order to cash, what exactly R2R team does, and what does the FP&A financial planning and analysis team does. So we will be discussing more and more in the upcoming videos. Till then, goodbye. Thank you.